Hello, my name is Rene Gorham, and I'm the President and CEO of BioSyent Inc. And I'm here today to share more information about a significant announcement that we made today. Before I go into my presentation, I want to bring your attention to our disclaimer on forward-looking statements. There will be some in this presentation. Today we announced the purchase of Oral Science. Oral Science is a privately owned Canadian distributor of specialized healthcare products, specifically for dental hygiene and oral health. So we've executed a definitive share purchase agreement with the shareholders of Oral Science, and through that transaction we acquire 100% of Oral Science shares from the shareholders and the founders of the company. I will go into some more detail on some of these elements, but at a high level, our purchase price is $25.5 million. There are provisions as well for performance-based earnout, and there are royalties on future sales of one product. We expect this transaction to close before the end of February. Given the fact that we're announcing it at this time in the month, we expect things to move smoothly from here towards the end of the month. The Oral Science leadership team, who are also significant owners of Oral Science, will continue with the business to lead the business. The shareholders, that is the leadership team and certain other individual shareholders, will become shareholders of BioSyent through this transaction, and I'll share a little bit more in a moment. This transaction is accretive. It will deliver material profit and cash flow in 2026, and in fact, if we can hit our internal timeline for closing the transaction, we think that we can impact our Q1 results. So as I said, the purchase price is $25.5 million. Of that, $22.5 million is paid in cash, and $3 million is paid in the form of BioSyent shares. As I mentioned, there's a contingent earnout based on the performance of the business in aggregate during 25 and 26 fiscal years, which is calendar, and that payment will be made in 2027 from the cash flows of the business. There is, as I said, a royalty arrangement on the sales of one product. That royalty is capped and has also a cap in dollars and time duration as well. This purchase price includes $6.3 million of working capital. So when we close the transaction, there will be cash, inventory, and receivables of at least $6.3 million in the business. For more details, I invite you to find the press release that is dated February the 9th. I also wanted to add that the $3 million worth of BioSyent shares have been calculated based on a 20-day volume-weighted closing price on the TSX Venture Exchange. So it's not based on kind of the recent close on a single day, but calculated on a volume-weighted 20-day closing price. So a little bit more about Oral Science. This is a revenue stage oral health company with a long track record of developing, sourcing, marketing, and distributing dental hygiene and oral health products. The business was founded in 2003. It's based in Brossard, Quebec, which is on the south shore of Montreal. It is a national business, a presence across Canada with a sales force. Its business comes from about 1/3 of proprietary products and technology. So these are products that are owned by Oral Science, and about 2/3 from in-licensed products. In this regard, the model is quite similar to the BioSyent model, where we own some of our products and we in-license products as well. What is unique here is that Oral Science has no sales of their products outside of Canada, and I'll touch on that in a couple of slides. 54% of Oral Science business comes from sales directly to dental clinics, and the rest comes from sales to consumers who buy the products at pharmacies across Canada and also through online sales directly from Oral Science. The company had, in the 12 months ending September 30th, had revenue of $30 million and EBITDA of $4 million. It has been a high growth company. Using 2018 as a base year, the compound annual growth rate through to 2025 has been greater than 15%. So this is a quick look at the brand lineup and the portfolio of Oral Science. A couple things to point out here on the top left of your screen is the XPure brand. This is actually a brand made up of 9 different products, and this is the asset that is owned by Oral Science, and none of those 9 products have sales outside of Canada. So we see potentially opportunity here to commercialize in select markets ex-Canada. In addition to XPure, Oral Science also owns the Perio Monitor. This is a new diagnostic that was launched in 2025, so it's really early days for this asset. It's a rapid 1-minute test that is done in the clinic, in the dental clinic chairside, to identify active periodontal disease. So this is a unique diagnostic that assists the dental professional and assists in identifying periodontic disease and also then in ensuring total care for the patient and follow-up. This asset also has potential outside of Canada, I would say, because it is unique on a global basis. So let me talk a little bit about the strategic rationale for this transaction. So upon closing, this does build scale in BioSyent revenue and profit. It represents approximately a 70% lift in revenue and about a 33% lift in EBITDA. So it is a good strategic use of capital that we've been building on our balance sheet for years and deploys the capital at a good rate of return. Somewhat de-risks our business model as we're concentrated in certain business segments and gives us a new platform in a tangential healthcare vertical. So this is a whole new platform and a solid and substantial strategic pillar that gives us growth potential that we can exploit for years to come. So going forward, Oral Science will be a standalone business unit of BioSyent. The business will continue to operate from its footprint in Brossard, Quebec. The founders and key management will stay with the business and continue to lead and manage the business. And the company will continue to focus on the oral health segment. We'll share some strategy and resource to work on commercialization of the assets that I spoke of before to see if we can exploit opportunities to expand the revenue footprint more on a global basis. And the addition of Oral Science to the BioSyent portfolio means that we now have opportunities to continue to invest in organic growth in specialty pharmaceutical and now in the oral health platform. So this gives us more optionality in terms of where we can go with growth opportunities. So a little bit into the financials. We've already spoken of the $25.5 million purchase price. We expect this transaction to close at the end of this month in February. On a pro forma basis, trailing 12 months to September 30th, revenue was greater than $70 million and EBITDA just under $16 million. This implies a purchase price multiple of 6.3 times EBITDA, the TTM September 2025. And just as a reminder, we have yet to publish our financials for Q4 and full fiscal year 2025. We are financing the transaction with existing balance sheet cash, and we have negotiated a term loan with the Royal Bank, and we expect that $6 million term loan to be repaid in the fourth quarter of 2026. The interest rate that we'll be paying is based on Cora and Cora Plus, but essentially if you use today's interest rate, our interest on the loan is 3.49%. Overall, this is a very excellent use of capital that's on our balance sheet. It gets us a strong business with excellent growth prospects at a fair valuation. It gives us greater capacity for licensing or acquisition opportunities into that area. But I would like to add as well that we will continue with our dividend program. We, in fact, just announced recently that we have increased our quarterly dividend. We increased it by 10%, and we've already declared our Q1 dividend. Obviously, that was fully knowing that we were in the process of executing on this transaction. And for those that have been following us fairly closely and noting that we have not been as active on our NCIB, I think you may have some insight now with this announcement today as to why we were not, but we will continue to be looking for opportunities to deploy capital into NCIB as we move forward into the future. Just a couple of comments on our balance sheet. So $16.5 million of cash on our balance sheet will come off and go into fulfillment of the cash portion of the purchase price, the balance, the $6 million from the term loan with RBC, and then, of course, the $3 million of BioSyent shares being issued. You can do the quick math on the 3 million in terms of the absolute quantity of shares, but I would refer you to the press release of February 9th to give you the exact number of shares being issued. And then, of course, expect the term loan to be paid off by the fourth quarter, certainly before the end of the year, but sometime in the fourth quarter. So you can see on the graphic on the right-hand side of your screen, kind of BioSyent alone, our cash position, over $30 million, goes down by 16.5 on closing. Our non-current assets go from just slightly, like a little over $5 million range into the high 20s, and our bank debt goes to $6 million. And then you'll see that evolve over time as we report out our quarterlies. So I want to wrap up the presentation today with a couple of things to point out to you. So we get about a 70% bump in revenue through this transaction. That brings us to, on a trailing 12-month, a $70 million revenue line. But of course, that doesn't include any growth that's been occurring in BioSyent and in the oral science business. So this is really a look back that's now 4 or 5 months dated. The other thing I'd just like to point out, something that is attractive for us, is the fact that we get an opportunity through this transaction to diversify the BioSyent business. I know that over the years I've fielded many questions about the fairly high concentration of FeraMAX as a total of our revenue. And, we take that down with this transaction from about 70% of revenue, because FeraMAX has been a growing business, continually growing business. So that comes down to just over 40% of total revenue upon the close of this transaction. Importantly for us, this brings a whole new customer base and distribution channels to exploit and gives us new avenues to continue to grow BioSyent as a company and obviously oral science. They have been a high grower, as I mentioned before, 15% compound annual growth rate. We think there is growth in this business for years to come, and we're looking forward to working together with the management team in exploiting those opportunities. I'd like to wrap on my comments around oral science, really around a unique strategy that they've developed. They are intersecting in the dental and oral health channel through the role of the dental hygienist. They're unique in Canada in the way they've done this as a strategy to enter market and to deploy really close relationships with over 6,000 dental clinics in Canada. That's almost 40% of dental clinics in Canada buy products from oral science. So on the one hand, that's pretty impressive, an outstanding footprint to continue to commercialize new technologies and new assets. But it also indicates that 60% of the clinics do not buy their products. So there's some opportunity there that we think for growth in the future. Oral science products are found in just over 6,000 pharmacies in Canada. Once again, that's an impressive footprint. Likewise, it represents significant additional growth opportunity to see if we can expand that distribution footprint and to get more of those products into more of the pharmacies. So not all of their products are available in over 6,000 pharmacies. And then the last comment here, bottom right of the screen to bring your attention, is that oral sciences sales have been entirely sourced from Canada and Canadian customers. And we think with certain of these assets that are owned by oral science, we think there's an opportunity to expand the footprint and to see if we can't acquire customers and distributors outside of Canada in other markets. As I've been ending my presentations to investors and shareholders now for years, BioSyent is a profitable business. It's now, through this transaction, about to become more profitable. We've got a strong balance sheet. We're going to have a strong cash position upon close. We're not deploying all of our cash. We'll have a strong cash position, and we'll have growth assets. There are several exciting things happening in the specialty pharmaceutical business, and now we've got a really significant growth asset coming upon close of the oral science business, as I've been talking about. So we continue to be focused on the long term, growing our business and returning capital to shareholders through dividends, share buybacks, and continued cash generation in the business. Thanks for your continued interest in the company, and we look forward to reporting our progress on getting this transaction closed. And soon, I guess in the month of March, mid-March, we'll be reporting our Q4 and fiscal year 25 results. Thank you.